Good morning. I am Malik. Welcome to the War Room. Today is Friday, February 27th, and everything the mainstream media told you about yesterday's market action is a lie. Yesterday, we watched the KSE-100 index drop to 163,000, wiping out retail margin calls before violently reversing and rocketing up by over 4,260 points. Everyone called it a miracle recovery. They said the institutions suddenly decided to buy the dip. But I have been scanning the regulatory wires all night, and we just got the real story. The Securities and Exchange Commission of Pakistan has just launched a sweeping investigation into illegal market manipulation and unauthorized short selling at the PSX. The 4,200-point green candle you saw yesterday afternoon was not a natural rally. It was a naked short squeeze. A cartel of brokers got caught illegally manipulating the index, and when the SECP stepped in, they had to buy back millions of shares in a sheer panic to cover their tracks. Today, we are going to expose exactly how they did it and how you can trade in the aftermath. Let us break down the mechanics of the crime. For the last 72 hours, the market lost 8,500 points. We blamed the IMF, we blamed global oil prices, but underneath that macroeconomic smokescreen, a group of rogue operators were executing what is known as wash trades and blank selling. Here's how it works. These manipulators collude to sell massive blocks of shares back and forth to each other at lower and lower prices. They don't even own the shares they're selling. That's why it's called a blank or naked short. Their only goal is to artificially drive the price down, break the psychological support levels like 165,000, and trigger panic among retail investors. Once the retail accounts hit their margin limits, the brokers forcibly liquidate retail shares at rock-bottom prices. The manipulators then scoop up those cheap shares to cover their illegal short positions, walking away with billions of rupees in profit. But this time, they got greedy. The volume anomaly, nearly 700 million shares, triggered the SECP's market surveillance suite. The regulator demanded back-office data. The moment word leaked on the trading floor that the SECP was investigating, the manipulators panicked. They had to instantly buy back every single illegal short position before the auditors arrived. That frantic, desperate rush to buy is exactly what caused the index to explode upward by 4,260 points. It was a race to hide the evidence. So where does that leave us today? We have a fascinating dynamic heading into the Friday session. Usually, Friday is driven by the Friday phobia, traders selling off to avoid holding risk over the weekend, especially with the IMF still in Islamabad. But today, we have the SECP Shield. With the regulators actively monitoring the tape and threatening criminal cases for manipulation, the heavy short sellers are completely paralyzed. Nobody is going to risk artificially suppressing prices today. The bears are locked in a cage. However, do not let that turn into FOMO. Just because the manipulators are sidelined does not mean the macroeconomic problems are solved. The 1.2 trillion rupee circular debt vacuum is still real. The super tax threat is still looming. If the index tests the 170,000 resistance level this morning, expect legitimate legal profit-taking from the institutions that bought the bottom. This brings us to today's crucible, Friday, February 27th. We have board meetings that will be heavily scrutinized under this new regulatory microscope. 9 a.m., Atlas Battery. A clean pulse check on the auto parts and consumer sector. 10 a.m., Amreli Steels. The steel sector has been battered. Amreli is a pure survival test for the construction supply chain. 10:30 a.m., Sioux Northern Gas Pipelines, SNGP. This is the heavyweight event of the morning. SNGP closed at 99 rupees. With the SECP watching, the energy sector cannot be artificially suppressed today. We will see the true market reaction to their half-yearly accounts. 11 a.m., Mughal Iron and Steel, closing near 83 rupees yesterday, a massive player in the long steel sector. 2:15 p.m., Pioneer Cement. This is the wild card. The agenda is specifically for matters other than financials. That means expansions, acquisitions, or structural shifts. Watch Pioneer closely before the weekend bell. Here's your battle plan for Friday. 1. Do not chase the squeeze. The 4,200-point rally was driven by forced liquidations, not organic growth. If the market opens up massively this morning, do not chase it. You will become exit liquidity for the smart money. 2. Watch the 167,000 line. With the short sellers paralyzed by the SECP, 167,000 is our reinforced safety net. If we hold above this level, the market is stabilizing. 3. Stick to the blue chips. The SECP investigation will likely target mid-tier and speculative stocks where manipulation is easier. Keep your capital strictly in highly liquid, high-dividend blue chips. I am Malik. We do not trade on rumors. We trade on the mechanics of the tape. Finish the week strong. Disclaimer. StockSense is an educational platform. I am an analyst, not a financial advisor. The market is in extreme volatility. Trade at your own risk.